Do you know that if you went to China and you gave everybody in China the option to move their money to the US, not all of them would, but a lot would, enough so that the Chinese government makes it illegal to do so. Right? The reason there are capital controls, there's a limit of $50,000 a year, is because if people could, they would. So there's a natural tendency of people to want to move their capital from a less secure, more chaotic, more uncertain place, maybe where their property rights are less. I mean, you remember Cuba when the boat people, when everybody wanted to leave Cuba and come to Florida? Right? People generally want to move from the less secure to the more secure place. They want to move their person, they want to move their money, etc. It's human nature. I think if we come to this siphon analogy, well, there's just so much energy that gets released when you move from an uncertain, unsafe environment to a more certain, safer, more sound environment. If I give you a stock option on the dollar bill and I say, Tom, the dollar bill is zero volatility, but I'm going to give you an option to buy 10 more dollar bills for $1 for the next year. Well, what is the option worth? It's nothing, right? Because the dollar is going to be worth $1. I mean, so a stock option with no volatility is worthless. The Black-Scholes equation is the conventional way to value a stock option. Suffice it to say, when the volatility goes to 15, there's a little bit of optionality. When it goes to 60, there's a lot of optionality. When it goes to 120, the option's exploding in value. And let me give you the practical value of it. If you had $1,000 or $1 million, let's say $1 million, you have $1 million in the bank. Well, with zero volatility, you can probably get paid SOFR. So you're getting paid 4% to take the risk of holding dollars in the bank. 4%. When you hold that money in the S&P index with the volatility of the VIX or 15, you might get paid 12 to 15% interest to take the risk of holding one share of SPY, the index. When you hold a share of Bitcoin via IBIT or a Bitcoin, the volatility is 60. You might get paid 70%, 80% to hold that $1 million in Bitcoin. And you're taking the downside risk, but you're getting paid that call rate. When you hold a share of MicroStrategy, if you were holding $1 million of MicroStrategy and you were selling the calls at the market with 120 vol, you could get paid 200% annual interest. You might not even know what it is. You don't know what Bitcoin is. You don't know what MicroStrategy does. All you know is that if it's not going to zero in the next 12 months, someone will pay you 200% interest. So your break-even point is 6 months, right? It's like, if I can hold it for 6 months and it doesn't go to zero, I'm getting paid 200%. I'm getting paid my money back. My break-even point is 6 months on something I don't understand. What I would say is Bitcoin is the first perfect money, the first monetary instrument in the history of the world that is a properly engineered store of value. The second best money is gold, and the second best money has a half-life of 30 years, and the first best money has a half-life of forever. And so the first best is so much better. Of course, intelligent physicists, economists that understand physics, or capitalists that understand physics are going to discover that. And as they discover that, they're going to buy it and build an industry around it and recapitalize on it. And they're going to draw concentric circles of other investors that I basically channel billions of dollars into the Bitcoin ecosystem, Tom, from investors that don't understand Bitcoin. They just want to do convertible arbitrage, or they want to do option trading. There are a lot of people that hate Bitcoin, and they come into the ecosystem because they just want to short my stock. So they short my stock and buy Bitcoin and create demand for Bitcoin, you see. So those are all secondary and tertiary investors. They have capital, they have money, and they want to play some game, whether it's short, long, trading, fixed income. People that have bought my bonds and they just wanted interest on the bonds, and they indirectly funded Bitcoin. But the fundamental physics of this equation is this is the world's first perfect money. That's Bitcoin, the asset, and Bitcoin, the network, is the greatest global open capital network in the world. It is free digital capital, 24/7, 365. 1,500 crypto exchanges are plugged into it, and it is the number one source of credit, and capital access everywhere in the world right now. And so that's why it is performing. That's why it's attracting capital. Because the ETFs are SEC 40 companies, that makes them investment trusts. And so a trust company is a special vehicle. It's constructed to own an asset and hold it in trust and not do anything other than hold it. So if what you wanted to do was buy a bar of gold, you might want to buy GLD or IAU. Those are gold trusts. And they're allowed to take your money and they buy gold. And then the asset's dead money. It's a dead asset, let's say a stationary asset in custody, and you have the shares. And if you were to sell your shares or redeem them, they have to then sell the gold and give you your cash back. So think of them as like overnight depository banks. I could have $100 billion in that bank. It's overnight deposits. I invest it in gold or soybeans or oil. And then when you want to redeem, I sell the soybeans and the oil and the gold. I give you back your money. And I charge you 20 basis points fee every year. The network reward is a function of the block rewards of the miners, and they will continue between now and the year 2140, and the transaction fees. And the transaction fee economy is an open free market economy. If you want your transaction to be processed in the next 10 minutes, you have to be the high bidder. And there's only 5,000 slots. And so the most important 5,000 transactions in the world are going to get to the top of the queue based upon the transaction fee of the broadcaster. This is why it's important to have scarce block space, because as long as the block space is scarce, the transaction fees will trend up over time. And as more people want to do more transactions, they will bid up the transaction fees. And right now, they're a small fraction of the rewards. But I think 10 years from now, they'll be the majority of the rewards for sure. And I think by 2035 and onward, most of the revenue that comes from the miners will be based on transaction fees. And transaction fees are a durable business model forever. I mean, every real estate company, every financial service provider, they all work on transaction fees. I mean, it's fine. Like, I want to move $1 billion from point A to point B. Would I pay $10? Of course I would. Would I pay $100? Sure. If you wanted to buy a $1 billion building and take clear title of it in Manhattan, what do you think the transaction fees are on that? Right? I mean, you could spend $1 million to move $1 billion. You could easily spend 10 basis points. How about the last time you sold your house? What's the transaction fees to sell a house to someone else? And how long does it take, by the way? Right? So when you think about it that way, like if I could sell my house in 30 days and it was $1 million house, would I pay 1, 2, 3, 4% interest or in fees? Yeah, I would. If I paid 1% fees, I think that's cheap. Well, 1% fees on $1 million transfer of Bitcoin, right? That's going to support the network. So I think Bitcoin's always going to be 100 times to 1,000 times more efficient to transact in than other instruments. But I do think there will be transaction fees. I think the fees will support the mining network. And the mining will continue forever because there's always going to be stranded energy and there's always going to be stranded capital. And so if you're sitting at the edge of the grid and you have a dam in the Himalayas, well, you're going to want to run Bitcoin mining with the dam in the Himalayas because that's the highest bidder for your electricity. I think that Bitcoin is a digital technology that solves an economic problem that's worth trillions of dollars. I don't think it cures cancer. I don't think it'll stop wars. People had wars after electricity and clean water. I'm just pointing out that Henry VIII dies of gout because he didn't have clean water. And of all the things that Henry VIII would have liked to have bought with all of his power, and he was the most powerful man in the UK, he would have liked that, right? This thing we take for granted, this thing that makes us go from living 32 years to living 80 years. Clean capital, clean money, digital money, high frequency, programmable money. It is a protocol for prosperity. And I think that if you're looking for a politically sound strategy, the most politically sound strategy is not to tell people that austerity is the solution or bludgeon them to death. It's just to introduce a new technology that delights and enriches everyone and spreads like wildfire. And I think Bitcoin is spreading like wildfire. I think that the US is now actually the worldwide leader in digital assets. I mean, we're going to catapult from being, 25, 30% of the way back from the pack, in the middle of the pack. We're going to catapult to number one because most of the rest of the world is fearful of innovation. If they're fearful of getting ahead of the US,